Hey everyone, it's Matt Donahue with your weekly market update. We're going to break down this week's latest market trends, deliver some insights, and keep you informed on some strategies to help enhance your financial well-being. Again, I'm Matt Donahue. For those of you who don't know me, I'm a managing member at Mission Financial Planners along with Jason Defoe and Kenneth Hamilton. So let's jump into it. Our weekly market update. Well, first, the week in review. The market PMI composite fell to 52.4. That's a slight dip in economic activity, but it's still holding above that growth threshold of 50. What's coming up this week? We have the Fed meeting coming up. Policymakers are going to deliberate on the state of economy and maybe make some statements about interest rates, so we'll see what they say. We're going to get a glimpse of fourth quarter GDP figures that'll give us a better picture of the economy's momentum. And then we're going to talk about the PCE, personal consumption expenditures data, that will give you some insights into consumer spending and inflation trends. One of the things that we want to talk about in terms of the market is the energy sector today. So immediately following his inauguration, President Trump signed a series of executive orders aimed at deregulating oil drilling and boosting U.S. national energy production. These actions, including declaring a national energy emergency, sought to address energy needs tied to AI and data center buildouts. But here's the reality. The U.S. is already the world's largest energy producer. While these policies could drive further production, the energy sector is grappling with a supply-demand imbalance right now. So for example, oil producers typically need prices around $64 a barrel to profitably drill new wells. Current prices leave little room for a decline. So despite these challenges, energy markets are stabilizing, and there's no need for investors to panic. The U.S. energy industry is strong, and it is well positioned for the future. Philosophy quote of the week. This one comes from Epictetus, and this one's a little wordy, but let me take you through it. It's a good one. There's three areas in which the person who would be wise and good must be trained. The first has to do with your desires and your aversions, learning what to seek and what to avoid. The second has to do with impulses to act, ensuring we act for the right reason. And the third is to do with judgment, maintaining clarity and composure in decision making. So those three areas, desires, action, judgment, they're interconnected. Improving one helps the others. So the question you want to probably ask yourself is, are you pursuing the right goals? Are you acting deliberately? Are you using sound judgment? Mastering those areas can help bring some clarity and some success in your life. Maybe even more clarity and success if you're already there. This week's tax tip focuses on medical, dental, and health expense deductions. Did you know you can deduct certain medical expenses for someone who isn't even a dependent? According to the IRS, medical care expenses include payments for treatments, health insurance premiums, and long-term care insurance. So here's a couple examples of some of the deductions you can take. Fees paid to doctors, dentists, and other medical professionals, costs for crutches, braces, wheelchairs, things like that. Travel expenses for medical care, which can include caregivers' travel expenses as well, and registration fees and travel costs for medical conferences. So keep in mind, some items like over-the-counter medications and cosmetic procedures, they're generally non-deductible unless they're medically necessary. If you're a business owner, don't forget that health insurance premiums, including Medicare, may also be deductible. So for some more personal advice, always work with a tax professional. Finally, let's talk about the 2025 financial fitness checkups. Earlier this month, we were focused on 2025 key data. We are shifting our focus to the financial fitness checkup. It's a checklist that's your guide to evaluating your financial health and preparing for a successful year. Some of the areas it focuses on: your family, who got married, who had children, parents getting older, did someone pass away, things like that. Your goals, any major purchases or projects, align them with your financial strategy. Your business, how to start growing or selling your business, maybe starting a business. That's going to impact your finances. What's the best way to go about that? Your health, plan for healthcare costs and ensure your family's covered. Your money, manage your debt, optimize your investments, reduce taxes. Your estate, right? Keep your will and beneficiaries up to date. Make sure you fund that trust if you have a revocable trust. Your retirement, maximize savings, manage your RMDs, required minimum distributions, streamline your accounts. In your future, plan for life changes, and big goals while you're building that financial resilience. Tie it all back to what we talked about with the philosophy quote of the week, right? Desires, action, and judgment. What do I want to have done? What am I going to do to make sure it gets done? And then, am I making a good decision? If you have questions or comments on any of this, let us know. You can reach out to me, Jason, or Ken directly. That's all for this week. Remember, financial confidence comes from staying informed and taking deliberate action. If you found this episode helpful, please share it with a friend. Go to our YouTube channel, like it on our YouTube channel. You'll see it over there. But thanks again, everyone. Have a great week, and we will see you in next week's